faced a sharp downturn today with major indices across the Americas seeing significant losses. In the United States, the Dow Jones Industrial Average tumbled 649.67 points, that is minus 1.48%, while the broader S&P 500 fell 104.78 points, that is a decline of 1.76%. The tech-heavy Nasdaq experienced the steepest decline, shedding 497.09 points, that is 2%, reflecting a major sell-off in the technology sector. The Russell 2000, which tracks small cap stock, also dropped by 60.83 points, that is minus 2.81%, highlighting broader market weakness beyond the large cap stocks. Also, the investor sentiment appears to have taken a hit, as reflected in the surge of the volatility index, that is VIX, which dumped 16.05% to signaling increased market uncertainty and risk aversion. Canadian market followed the US trend, with the S&P TSX Composite declining by 391.88 points, that is 1.54%, and the S&P TSX 60 falling 22.04 points, that is 1.44%, pointing to concern in the resource-heavy company. Also, in Latin America, Brazil's Bovespa index suffered a significant drop of 1.60%, losing nearly 2,000 points, reflecting investor concern about the economic condition and potential global headwinds. However, Childs' S&P IPSA index bucked the trend, gaining 12.84 points, that is 0.18% rise, suggesting relative resilience in the Chilean market. Meanwhile, the Mexico's S&P BMV IPC index fell by 24 points, that is 0.47% of the declining, and though the decline was the less pronounced compared to its regional peers, it was devastating. The widespread market downturn could be attributed to growing economic uncertainty, concerns over the inflation, or expectation of central bank policy changes. With heightened volatility and investors shifting to a risk-off approach, markets may remain under pressure in the near term. Also, eyes will be upcoming on the economic data releases and the central bank statement for potential signals on the future market directions. Commodity markets saw mixed movements today, with energy prices declining while the natural gas edged slightly higher. WTI crude oil fell by 0.53% to $68.01 per barrel, while the Brent crude oil dropped 0.72% to $70.65, reflecting the ongoing concern about the global demand and economic conditions. Natural gas, however, saw a modest gain of 0.34%, rising to $4.14, possibly due to a seasonal demand fluctuation or supply concerns. In the metal sector, gold experienced a slight decline, falling 0.09% to $2,898 per ounce, as investors balance inflationary pressures with the broader economic uncertainties. Silver also dipped by 0.57% to reach $32, tracking the overall downturn in precious metals. Agricultural commodities showed similar trends, with the soya bean slipping 0.72% to $10.4, reflecting the potential shifting in the global supply and demand. The overall commodity market movement suggests investors are weighing economic conditions, inflation trends, and geopolitical risk, influencing both energy and metal tradings. Markets may remain volatile as traders react to the further economic data and policy shift. Overall, today's commodity markets trend indicate that investors are weighing multiple factors, including economic data, geopolitical developments, and central bank policies. Volatility and the volatility will remain a key theme, and traders are likely to remain cautious as they wait for the further signals on inflation and with the interest rate and the global trade conditions.